Turbo has performed quite well in the last month. The question is, how much longer can this rally last and who's pushing the price? Who's currently betting on this rally? What's causing all of this? Let's have a look at some data most people are not considering. Now here's the current rally. We are up 223% in the last month. For comparison, Bitcoin only went up 13% during the same time period. Performance like this, of course, does not happen without any risk. We've seen our fair share of ups and downs in the Turbo price in the last year. Now, this is not the first video on Turbo on this channel. There are already 8 videos. And while the first one, published roughly 1 year ago, outperformed the average video by quite a bit, so there was a lot of attention on the token, the recent video just performed like average. So there seems to be some kind of shift happening here. The price is up again, yet the attention of the average retail investor isn't up to the same degree. Let's have a look at our on-chain metrics. So first of all, we've got more than 50,000 holders on-chain, on the Ethereum chain to be more specific. And this seems to still be slightly growing. But let's have a look at this in a bit more detail. What we see on the left is the number of retail investors. In the middle, we see the number of medium-sized investors. On the right, we see the number of whales. And the way we make this distinction is by looking at minimum holding thresholds. So to be counted for the chart on the left, a wallet has to hold at least 175,000 Turbo tokens. Now at the current price, that's roughly $1,000 worth of the token. The minimum holding threshold in the middle is a 10x from that, so that's not $10,000 worth of the token. And on the right, it's another 10x, so $100,000 worth of the token. We can clearly see how there's a difference, how those wallet cohorts accumulate. The whales didn't really buy in May of 2024, while the retail investor did. Here's that rally in May. So clearly retail caused their initial run. But now we're going back up again, and we don't see a change in the number of retail investors at all. Let's just have a look at the last month. So again, the number of retail investors did not change. Medium-sized retail also didn't change. The number of whales slightly went up, but also not significant enough to justify this rally. So really, what's going on here? I think the answer to the puzzle is leverage. It's bets on the price. It's the perpetual futures, or some people might call it market manipulation. There are very large holders of the Turbo token that can impact the price quite a lot. At the same time, we also have levered bets on the price. So let's say you're a centralized exchange, you offer bets on the price, but at the same time, you also have an impact on the price. That's like being a sports betting house that has bought the referee. Sounds like a pretty good business model, doesn't it? Now here is why I say all of this. Have a look at the largest trending tokens on Ethereum. Turbo is only at place 60 when we look at the liquidity on chain. So the largest liquidity pool on chain is only worth $500,000. And that's for a token that's worth almost $400 million. Have a look at this. This is the largest holders of the Turbo token. A lot of the supply is held by Uphold, a centralized exchange. We've also got supply held by Binance and by BitGet. So it's the market makers, it's the whales that push the price around. In fact, on chain, we have only seen 108 wallets interacting with the token in the last 24 hours. Have a look at this. This is the bets on the price. And in the last 24 hours, we have seen more than 200 million worth of trading volume on the 2 leading centralized exchange markets. Again, while on-chain the trading volume was only $181,000. So the value that's moved on the derivatives market is more than 1,000 times larger than what happens on the spot market. So this is pretty much the tail moving the dog. The bets on the price are actually what's impacting the spot market. It's not the spot market that determines where Turbo is going. And here is what happens when there are too many bets on the price. When many people think that Turbo will go down in price, when the perpetual futures have a negative funding rate, or when the shorts have to pay the longs in order to bet on falling prices, then those shorts tend to get squeezed, or the market makers manipulate the price to the upside in order to collect all of those liquidation fees. That's what happened over here on the 23rd of April. The price went up. A lot of people were betting on falling prices, yet the price continued to rise. Just have a look at how much impact the bets on the price have on the actual underlying. So here in green, we see the open interest. So that's the value of all of the bets on the perpetual futures market. And in yellow, we see the turbo price. Whenever there are a lot of bets on the price, the spot market also tends to go up. Whenever there are less bets on the price of turbo goes also down. And currently, it seems like the open interest is expanding a bit again. And so the market makers have an incentive to push up the price, simply because so many shorts get liquidated in the process. Volatility means profit for the market makers. This is not a natural rally. This is all player versus player. And one of those players is unfortunately the most skilled players. It's the market makers. It's the people that know what they're doing. Now, crypto cannot make money out of thin air, right? For one person to make a 10x return, 9 other people on average have to lose everything. And so it is a winner takes most market. This is not just true on a trader basis, it's also true on an asset basis. As in, most assets tend to go down and a few assets outperform. What I found interesting is the different returns based on the centralized exchanges. So different centralized exchanges list different tokens, and the performance of the tokens that are listed on Binance, they tend to do worse than the rest. So here's the performance in the last week. Let's check the 1 month performance. Again, Binance performed the worst. Let's go to 1 year. And one more time, the Binance tokens tend to do not that well. And so my impression is that a lot of the returns that those centralized exchanges are making is not just from trading fees, it's not just from financing fees of perpetual futures, etc. It is also from getting allocation for various altcoin projects. So Binance might take a cut of the overall supply and then sell it off silently in the background, depressing the prices. And other centralized exchanges might do this less. So that's something to potentially consider if an asset is mainly traded on Binance and not on other exchanges. It's reasonable to be somewhat careful. Now, when the chances are so high that we pick a loser in this market, when most returns are just in a few assets, then does it make sense to simply just follow Bitcoin? In the end, Bitcoin's dominance continues to increase. So that's a measure of how much of cryptocurrency's market cap is currently in Bitcoin versus all the rest. And we tended to see this going down very quickly, very sharply, when we were at around 70% Bitcoin dominance. So those crashes in Bitcoin dominance, this is altcoin season. But it looks like we are on our merry way up, and it looks like this could continue until the next year. Now it's fascinating to see this chart, because while the Bitcoin dominance went up, we saw how Memecoin speculation, especially the Pump.fun ecosystem, grew a lot. Now, why did Memecoin speculation become that popular? The reason is in this chart. This is DeFi Llama. So how much capital is in decentralized finance across all blockchains? And we had our DeFi summer in 2021 and then the collapse in 2022 where Terra Luna went bust. But it wasn't just Terra Luna, it was also Olympus DAO, which went from $1,000 to $20. It was Time Wonderland that went from $10,000 to 3 cents. There was Tomb Finance, which went from $3.50 to less than half a cent. Or how about this? Elephant Money, also just a straight destruction of capital. It became more and more clear that a lot of those decentralized finance protocols did not actually make 20-30% per annum. Instead, they were just Ponzi schemes in disguise. And so we had the DeFi Ponzi schemes, we had the vesting schedules and the insider selling of all kinds of altcoin projects. And so then Memecoin speculation seemed to be the fair player versus player game. At least over there were no insiders that were selling additional supply. At least over there, we didn't have a clear Ponzi scheme. It was just tokens that were traded against one another. That's why meme coins took off that much. We can see that the market now has less risk than it used to have. So what we see here is, again, the decentralized finance total value locked. That's the blue line. But what we see in turquoise in the background, that's the stablecoin market cap. So now there's way more stablecoins compared to DeFi capital. In other words, the market is less levered, it is less risky, and is likely not going to crash as a whole that soon. Still, trading meme coins is 100% player versus player. And since it's not just a game of luck, but also a game of skill, a game of on-chain analytics, or a game of figuring out who buys the right tokens early enough, who might have a following to attract attention, since it's still player versus player, some few players make all of the gains, they make the 10x gains, and 9 other players, they lose everything. Now there are actually some concrete numbers to this. Only 0.002% made more than $1 million with Pump.fun, only 0.05% made 100k, and only a bit under 0.5% made 10k with Pump.fun tokens. Now the average wallet size is of course much smaller than that, so there is a bit of dilution in those numbers, but it's clear that most people can't win in this game, right? This is a capital concentration process. And so naturally, after a while, when capital is in the hands of a few winners, the market tends to slow down. And that is what we have seen, right? The peak in Pump.fun activity happened in January of this year. And so again, does this mean we should just stick with Bitcoin since Bitcoin's dominance is going up? Or does it make sense to potentially try to beat that market? Let's have a look at the largest Pump.fun ecosystem token, which is Fartcoin. It's got a size of more than 1 billion. With our wallet tracking, we got a signal that Kyle Chessy was buying Fartcoin at around 4 to 5 cents. Here is Kyle Chessy. He tends to make some very interesting trades. Not all of them, of course, work out. Not all of them become a Fartcoin, but he's definitely closer to this than closer to this bracket. And so this is what I believe is the secret in this market. It's trying to find out who are the winners and then also what kind of wallets do they hold. So here are the wallets that we have found using on-chain analytics just by Kyle Chessy. In total, we track more than 400 wallets, and it's all in this influencer trade channel. And here's the proof. I made a video on Fartcoin when it was still at 5 cents. So I tried to publish videos still early on this channel. Of course, I don't talk about every single influencer trade here because the influencer trades are part of the premium community, which by the way is down below. It's thebitcoinstrader.com. So since that alert, Fartcoin went up by more than 4,000%. Then it came back down. Now it's recovering again, still since the alert, an increase of more than 2,000%. And so this is how the game works. I'm not even certain that Kyle Chessy is the one that found the token first. He might also follow other wallets. He might also be part of other communities that find those things early. And that's the reason why he might have bought. And so there are different strategies to outperform this market. Of course, we can try to find this 10-20x returns, but more often than not, those investments go to zero, right? We can have 3, 4, 5 failures. If one of them goes to 10x or 20x, that's fine. But it's pretty hard on risk management. A strategy that also works, especially when prices tend to go sideways, when money isn't flowing in as quickly, that's shorting altcoins that have just recently seen a rally. So I have made several videos on this as well. Check out the older videos on Dogecoin on this channel. So between November of last year and January of this year, I showed the exact same chart. This is not Dogecoin in US dollars, it's Dogecoin's dominance. How much of all of crypto is currently in Dogecoin? And it tends to be trading in somewhat of a range again. And the price goes up very quickly, maybe when Elon Musk talks about Doge, or maybe when there's another significant news event. But after that rally, the price tends to underperform. And we can make money from that underperformance. We're not even betting on the price itself going down. We can bet simply on Dogecoin underperforming the rest of the market. So we can bet, for example, long Bitcoin, short Doge. So in the end, we are not delta exposed. That means we are independent of where the general market is going because we have one asset that's long, one asset that's short. The overall macro doesn't matter too much. But then we are betting on the relative performance of Doge to Bitcoin. And when that goes down, we can make money as well. And I have made money with that short. There are plenty of very nice trades that our community has done. So over here are just a few of them. This has been shared by community members. And yes, not every trade works out like this. But if we have risk management in place, if we look at the overall trading ranges, because Dogecoin can't go above certain relative valuations to other cryptocurrencies, then we have positive expected value. So instead of trying to pick the few winners. An easier strategy is just to bet on most altcoins doing worse. And so that's then where a lot of those trades are coming from. I'm of course sharing my own trades as well. So this was the last trade that I've closed. This was a short on Trump. Trump relative to Solana was at a high, and then subsequently it deflated, and then with the right leverage we can make some quite nice gains relatively quickly. And so this is all part of the premium membership. It's not just the Telegram chat, it's not just the trade signals of the influencers that we are following with those 400 wallets, it's also a whole platform with tutorial videos. So in case you've got some time, let's say during your lunch break, feel free to, instead of just scrolling Instagram, to go through the tutorial. So here are those tutorials. There are more than 100 in total. Feel free to just binge watch them. So it's currently $125 per month. There's also a 1-week money back guarantee, and you should see somewhere on the screen now a link to premium. Just click on that and feel free to check it out. So see you next time on YouTube, or see you in premium. Cheers.